The local bourse is again facing mixed Asian markets today, with the Shanghai composite in China gaining while markets in Japan were flat and lower in Hong Kong. Karl Gevers is an independent markets analyst joining us now to give us a sense of how the markets are shaping up in early trade. Karl, good morning to you. Your quick overview of how local trade is faring this morning.
Yeah, good morning, Oli. I think our market certainly picking up from the slightly positive sentiment in Asia. So the oil share up currently about 0.5% across the board. So across financials, resources, and industrials. We've also seen the rand strengthen, and majority of that has to do with the slightly weakening dollar. So the rand trading at 17.08 at the moment against the dollar, and the weaker dollars also then helped the commodity prices. We saw a slightly stronger gold price, currently trading at $1,715 per ounce. So overall, a decent opening today.
Let's pick up with the local prices, or should I say oil prices. Apologies for that. They're faring lower this morning. This is after OPEC decided to reverse 100,000 barrels per day increase for the month of September. Talk us through those developments.
Yeah, so we saw a bit of a rally yesterday in oil after that agreed cut that you mentioned by OPEC, 100,000 barrels per day, and that obviously reducing supply, and the market reacted positively to that in terms of the oil price. But I think, over a bit of time, the market does get concerned about, we've seen increased lockdowns in China, and we've seen Europe under pressure from an economic growth point of view, given the gas crisis that they've got there. So I think the demand side is a bit worrying, and that's brought upon slightly weaker oil price again, coming back down below the $95 per barrel level.
Yeah. Later this morning, the eyes will be fixed on the South African GDP figures for the second quarter. Now, Karl, this is important because it's expected that they're going to give a breakdown of how the local economy was impacted by the devastating floods in KZN back in April, not to mention the load shedding, the rolling blackouts that we saw. Your expectations?
Yeah, so the market is expecting a 8.8% decline in the second quarter on a year-on-year basis. So I think there will be a big impact by the load shedding that we've seen. Went down to or up to stage 6 at times. So I think certainly a huge disruptor in the economy. So I think it'll be quite a key number to watch and to see. Obviously, the comparative is also a bit of a mess, given the riots and so on that we had in the prior year. But I think it certainly will be a key number to watch, and probably will be a big mover in the market today.
Let's conclude with company news. Shoprite Holdings publishing its results for the 52 weeks to the 3rd of July 2022. How are their numbers looking?
Yeah, so Shoprite released a positive trading update in July. So a lot of it was to some degree expected, but sales growth of 9.6%. And if one considers their internal inflation of 3.9, it's not too bad a number. Headline earnings per share up at the same similar number, 10.3% up to R10.55 per share. And the dividend for the year also up a similar 10.3% to R6 for the year. And across the board, decent trading, some market share gains. The share, however, has been down 6% in early trade. So the market might be slightly disappointed by this, having expected probably a slightly better number. But I think if one considers the environment, probably not a bad result.
Karl Gevers, thank you very much for that markets update. Independent markets analyst there.